What's up everybody? Welcome to the Stocks channel. My name is Corey and today we did see a very strong bounce in all of the indices, but overall we still have a very strong downtrend and we're still in the thick of a bear market. Can we rally into the month end, or is this just a bounce before we continue to go lower? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were up 2.52% and SPY did close back above that very critical level at 370. So while I do believe we will see an end of month rally which could take us all the way back up to close both of these gaps, which means SPY would go all the way up to about 401, you still need to have a risk level, and right now I would continue to tell you to use that level at 370. So while SPY is above 370, I would expect to see this counter trend rally, but as soon as SPY starts closing down below 370, I would instantly start expecting SPY to start trending down towards 350. So as traders, you always need to manage your risk, and as a long trader, you need to set your risk right here at 370. And if you're still short in this market, you need to be a lot less bearish while SPY is above 370, because there is the real possibility we are trying to rally all the way back up into the 390s and possibly even 400s. Now, without a doubt, this is still a very strong downtrend and we're still in the thick of this bear market, so there's no reason to get bullish just because we're bouncing. So I continue to tell you to treat all bounces as a potential lower high before the next leg lower to put in the next lower low. For all we know, this is going to be a bear market that lasts the majority of the year and maybe even longer. So you are not going to assume that the bottom is in until we start seeing bullish price action that consists of higher highs and higher lows. The bulls have a lot to prove before we ever assume this bear market is over with. So continue to get comfortable seeing lower highs and lower lows as we continue to trend lower in this market. Now that doesn't mean we can't get bear market relief rallies, and that is exactly what I'm expecting to see at the end of the month, as long as SPY is above this level at 370. As soon as we break below 370, look for a retest of that low right around 365 and that brand new low price target at 350. And if we continue to trend higher, you're looking for very strong resistance at 385, the gap close at 389, and if we continue to trend higher, you're looking for strong resistance at 395 and the gap close at 401. Remember, it's a bear market, so bears will be waiting at every single resistance level, so the bulls have a lot of work to do going against the trend, blasting through resistance and trying to get a counter trend rally. So the next couple of weeks, I do expect to be very volatile, because remember, volatility does work in both directions. So we're either going to get a 20-point move to the upside or likely a 20-point move to the downside. And that is why you need to use that level at 370 to let you know which direction we are likely going. It's as simple as whether or not we are above or below 370, so do not overcomplicate it. On the NASDAQ 100 triple Qs, we were up 2.33%, and the triple Qs did close back over the 5 EMA, but we are still below this resistance at 285. If you look at the overall structure of the market, it does look likely that this could be the end of some type of down move before we get a relief rally before we go any lower, but we still are trading below this level at 285, which is the previous support. And it's obviously the newfound resistance because we failed to close above that level for 2 times now. So if we get rejected from 285, that will be bearish, but we still do have support down here at 275 and 269.5, and our support trend line right around 266. Remember, you are at increased risk of capitulation if we break down to new lows. So as soon as we start breaking down below 269, you instantly need to get a lot more cautious of a next leg lower, which could also be that leg lower that causes capitulation. So your risk level for the triple Qs is down here at 269. And if we can break above this resistance at 285, then you'll be looking for gap closes just above 288, strong resistance right around 294, and then the next gap close at 299. There will be bears waiting at all of this resistance, and we are still in a downtrend. We're still in a very strong bear market, and the triple Qs have a lot of proving to do from the bulls before we ever get bullish on this ETF. So remember, in order to get bullish, we need to see higher highs and higher lows, and we need to break all the way back above this previous high right around 315, and that is going to be a lot of time coming for the bulls before we get that confirmation. So continue to respect the bear market and the downtrend, and treat all of these resistance levels as potential lower highs before we continue to make the next leg lower. In the Dow Jones, we were up 2.2% today, and the Dow Jones did give a bullish indication today because we did get that gap up, which did leave an island reversal pattern, which is usually a trend reversal pattern. So we're in a bear market and we're in a downtrend, and we're getting this island reversal, leaving the last 2 days of price action on an island. And that could mean that we're done with the downtrend in the short term and the Dow Jones is getting ready to go into an uptrend. Now, in order for price action to confirm that, we will need to get this close above right around 311 and fill that gap at 314, continue to trend higher to break back over the 20 simple moving average at 319, and close the gap above 323. So there is a ton of work for the bulls to prove that this is the real deal island reversal, and it's just something to be aware of. It is not something I would put too much weight on while we're in this downtrend, unless we can see price action breaking back over 311. Your risk off level in the Dow Jones for capitulation will be the closing prices below about 299 to 297. So make sure if we start breaking down to new lows, you are at increased risk of capitulation, so just be aware of that. We're no longer getting the island reversal if we fully close this gap down here right around 301, so pay attention to that downside support as well. In the Russell 2000 IWM ETF, we were up 1.79%, failing to close back over the 5 EMA, and as you can tell, we are still in a very strong downtrend and a very strong bear market in the small caps. In order to start getting more bullish in the small caps, we need to start closing back over 175, close the gap right around 178, break back over the 20 simple moving average at 180, and fully close the gap just above 183. That is a lot of work for the bulls, so pay attention to all of that critical resistance, and there will be plenty of bears waiting at every single one of those resistance levels, so it will not be a smooth ride for the bulls. On a breakdown below 163, we get that next leg lower with valid price targets to the downside at 160 and 156, with 156 being the valid price target for a capitulation scenario. On the ARKK ETF, we were up 4.38%, and ARKK did close back over resistance at $40, but we need a second day of follow through, and we have very strong resistance just above right around 42 to 43. If we get the close above 43, that will look like a bullish breakout above our resistance trend line, but we still have very strong resistance at 47, so you cannot get bullish until we start getting consecutive closes above the 40s, and if you want to be even more cautious, wait until this ETF can close above 50. To the downside, you now have support at $40 and the gap close right around 39, and if we break below the gap close, you're looking for a retest of the lows at 36, and below 36, we still have that valid price target at 33.7 as long as we're in the bear market. This ETF has been in a bear market for a very long time, so I definitely do not suggest getting bullish on something that's in a strong downtrend until we get bullish price action confirmation, which we don't yet have. On the VIX, we were down 2.71%, and the VIX did find support right around that level at $30 and failed to close above it, even though we did get a very strong bounce and a very green day in the markets. This is definitely a warning sign I wouldn't completely ignore. The VIX is in a bull trend, still trading above 30, so this is still a very volatile market, and as long as the VIX is above 24, it's going to remain a volatile market, and it's definitely going to remain volatile while the VIX is above 30. So the next bullish breakdown in the VIX would be closing down below 28 and then getting that close down below 24, and remain very cautious of that capitulation above 30 because we could still see the VIX spiking up to 38 and possibly even higher before we reach capitulation and put a bottom in for this bear market. On Bitcoin, we're currently up about 1.4% with Bitcoin trading just below 21,000, and as you can tell, we did test that support zone right around $20,000. And we did get one day closing below it, but not the second day of follow through. So whether or not this is just a dead cat bounce in Bitcoin before we trend down towards 12,000 is to be determined, but I do expect to see $20,000 in Bitcoin holding up as support for at least the indefinite future, because I do think there will be a lot of buyers at this level. If 20,000 holds up as support, you're looking for a bounce and retest of the breakdown at 28,000, but overall this is still a downtrend in a bear market, so don't expect higher highs and higher lows until the price action confirms it. On a breakdown below 20,000, you're looking for that next price target to the downside at $12,000. On NVDA stock, we were up 4.32%, and NVIDIA did close back over 161 after looking like what could be a double bottom off of 156. So the longer NVIDIA is trading above about 165, the more likely that is going to be a double bottom, which could easily take us back up to fill the gap right around 180. Above 180, we still have resistance at the 50 EMA at 189, and then we need to break above the previous high at 196. So there's still a lot of work for the bulls to do in this stock. If this is just a bounce before we continue lower, we still have the valid price target at 150, and below 150 you have that full-blown capitulation support at 125. You can start getting more bullish on this stock if it starts breaking above the 20 simple moving average, which is currently right around 175. On Tesla stock, we had a very bullish day today, going up 9.35% and closing back over that resistance at 700. So if we can get one more day of follow through closing above 700 for the second day, that will be bullish price action. You can see price action is starting to break above our resistance trend line, breaking back over this previous high at 700 and closing back over 3 of our 4 moving averages. The next critical test of resistance will be up here at 775, and if we get that breakout above 775, it will look like Tesla stock has the higher high and the higher low, which could send this stock into a bull market. So whether or not this was just a false breakout before we continue lower or the real deal bullish breakout is to be determined as soon as tomorrow, but so far this does look like a very nice green day on increasing volume, so I wouldn't completely ignore the fact that Tesla stock is showing some bullish strength. On a break back below 700, look for a retest of the breakout right around 690, and below 690 we still have the gap close at 650, strong support at 620, and the next leg lower at 571. But this is a lot less likely that we're heading lower while we're trading above $700. So right now I am leaning more bullish on Tesla stock. On Apple, we were up 3.28%, and Apple did gap up and test resistance at 137, but so far failing to close above that resistance, which means we could come back down to fill the gap at 131.7 or retest the price target support at 130. Below 130 will likely get capitulation, so that is a very critical support level for the bulls. And above 137, that will look like a bullish breakout with upside price targets at 141 and the gap close at 142.5. Above the gap close, we have the resistance trend line at 145 and very critical resistance at 150. So there's a lot of resistance for the bears to work with while we're in the downtrend in Apple stock, with that very critical support for the bulls to hold at 130. On the financial sector, we were up 1.45%, and we still do have two gaps to fill to the upside, but still failing to close back over the 5 EMA. So the bears are still very strong in the financials. The industrial sector was up 1.38%, bouncing off of our trend line, but failing to close over the 5 EMA. And while we do have gaps to fill to the upside, it still looks like this is a very strong downtrend. The healthcare sector had a strong bounce today, going up 2.26%, closing back over the 5 EMA and getting very close to filling the first gap. It's still in a bear trend and still trending lower, so don't get overly bullish until we get that bullish breakout. The energy sector was up 4.01%, but this looks more just like an oversold bounce because we were way below the lower Bollinger Band and we didn't even bounce back over the 5 EMA. So it definitely looks like the energy sector is out of the bull market and going through that full-blown correction. So do not get bullish on the energy sector while it's trading below 77.5. So jumping back over to the S&P 500, please remember that this is still a bear market and this is still a downtrend. So even though we do expect to see a bounce into the end of the month, you cannot completely ignore the fact that if SPY breaks down below 370, we could be reaching capitulation. It's very important that you protect yourself to the downside in a bear market, because just like a bull market where you don't want to bother trying to call the top, in a bear market you never want to bother trying to call the bottom. Nobody knows where the bottom is in this bear market, and things can always go from bad to worse. So just follow price action and have a very solid trade plan, and always use proper risk management. No matter what you're doing as a trader, you need to know when to cut your losses when your trade plan isn't working, and move on before you blow up your account. For that reason, treat SPY 370 with the respect that it deserves. And if you're bullish above that level, you need to get a lot more risk off if SPY closes below that level. If you're a bear, you still need to be cautious shorting the market if we are getting a counter trend rally, because you don't want to be holding short while SPY is running from the 370s all the way back up to 400. So no matter how you're trading this market, you still need to use proper risk management. So don't throw caution to the wind. This is still a market that's very volatile, and volatility does work in both directions. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.